ProfessionalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. I just have to see if I can get the right page loaded so I don't look like a doofus. And if somebody barks at me on YouTube, I'm ready here to go. Happy Friday, TGIF. Uh-oh. Oh, geez, these jerks. Now what have they done? Darn. Switch account. How the hell did that happen? Okay, so YouTube has thrown me a curveball. Sorry, everybody. Was not expecting that. Let's see if I can quickly rectify the situation. Anyway, TGIF. I don't know what you're seeing on the screen, but it is Friday, October 27th. So, gee whiz, well, the month of October is gone. Sure hope you enjoyed it. Coming into Halloween. Interesting, Halloween's going to happen in the middle of the week. So I guess this is the weekend for Halloween parties and stuff like that. So I hope you all enjoy yourselves. Try not to wind up face down in a ditch. I used to have a bad habit of that happening for me. Just kidding. Man, I haven't been out to do those socializing things for years now. Anyway, you're not here to hear about social activity. You're here to hear about the market. So let's go see what we can tell you about what's going on in the market, what's going on in the world today. I was a little surprised actually to see the violent dump out of names like Google yesterday, which I suppose caused, and then maybe it was yesterday or the day before, caused quite a kerfuffle. If anything, we've been talking about this breadth indicator and how usually these market bottoms don't look like V's. And this was like a V bottom there a week or two ago. Geez, I guess near the beginning of the month, a couple of weeks ago. We rolled over, came back down, tested the lows. Are we going to start putting in a nice little bottom in here on the fast? In actual fact, all of you crypto fans who saw the big move higher off of the really pretty buy signal that we got there on the crypto breadth index a little while ago. Hopefully you see kind of the similar pattern. Do we get a W that comes in here on our fast indicator and then a cross back above? And if so, that actually might portend for a nice seasonal rally here. I don't think we're going to get a hell of a lot of help out of the Fed here next week. They are coming up and they'll have their early November meeting in just about 1 week, a little less than a week, I guess. And it's always fun for us to have those Fed video broadcasts we do. Really, it's quite enjoyable to do those, talk our way through the Fed speech, first hour of trade, see how they market gyrates all around. So that's pretty educational. You look forward to that content coming up. As well, too, we just had our Coinigy show, and man, we sure went through a whole bunch of very bullish looking altcoins. So I do get the impression that the 4-year cycle is sort of winding up. Of course, we're heading into halvening events coming up in the spring of 2024, which usually is sort of a marker that we'll head back into a crypto bull market kind of stance. A little concerned about the corn here in the short term. We've had quite a move up here, so don't be shocked if you actually have to have a bit of a pullback here. And then also too, this is the end of October. Yeah, actually, I can't really comment. I know following the end of November, we usually have a soft period in the market following sort of a hangover from all those Black Friday and Cyber Monday deals and all that stuff. But end of October, it should be an interesting period because Usually September, October are the worst sort of performing months in the market, and we usually should expect some sort of trough to come in. Also, too, this is eclipse season, so if you were able to join us recently, Cole's broadcast recently, we talked about the sort of expectations of what we should see based on this eclipse season. And seeing the way Bitcoin just literally went straight up through that window and now is sort of pausing as we're coming. I think the eclipse is tomorrow. Probably another reason why maybe we should maybe think about the market taking a bit of a pause. Doesn't necessarily mean the price has to crash, but I wouldn't. At the very least, I would like to see a little bit of sideways here. But anyway, we'll cross that bridge when we come to it. So we are in fairly. How else would you describe it? Seasonally, the expression goes, buy when it snows and sell when it goes. And this is about the time of year when the snow starts flying in North America, at least the northern hemisphere. And I suppose also to Europe in the next few weeks. So we probably should be thinking about bottoms coming in, especially like broader market, stock market. Also, too, interesting information you can glean from the histogram. I've told you guys repeatedly. Country funds are a great way to sort of keep an eye on the world equity markets. When the whole world equity markets, like they're just selling everything, selling China, selling Europe, selling Americas, right? You can only stretch the rubber band so far. And when you see it both oversold on the short and medium term, that's usually an indication that we're near some sort of pivot low. We did have a situation like that. You can see there at the beginning of October, and we sort of dead cat bounced our way off of those lows around the sort of world equity markets. Then you can see we've dipped right back down here. Are we going to make a double bottom? I mean, this red line cannot go below zero. In actual fact, if we look maybe at the crypto breadth on the other side, maybe in the after party. Really good example where it's the exact opposite situation. It's right up at 100. It just can't really go much higher. So anyway, at 14, yeah, a little bit of wiggle room down here. I would actually like to see this slow indicator work its way down into the oversold zone, which would bring the S&P 500 down. Maybe if we had like a week or two of just a little bit of weakness heading in through that early November, buy when it snows window, that might actually mark the bottom. I mean, what's the best way to describe all this? I think, because it's Friday, we always have to sort of keep an eye on options expiry. So we can always talk a little bit about that, but also too, I like to sort of keep an eye on sort of what the market darlings are, the big boys and all that kind of stuff. Also too, not a bad idea to just get an idea of what sort of the broader market carpet, sort of what sort of the sentiment is today. And you can see that the tech stocks are feeling pretty happy after kind of getting beat up recently. Like Google really took a punch in the nose. Interestingly enough, the financial stocks are looking really poor. And if you follow me, of course, I've been talking about the stupidity of the Canadian real estate market. And one easy way to see that is to look at some of these Canadian banks, and they just look like absolute train wreck. So let's see. I think I did a big write-up on these. I don't know if I have. I guess it must have been off a different sheet. Anyway, what do I want to say here? Actually, I got to say, like, just Canada in general actually looks a bit concerning here. Actually, maybe this is the US stock that we have up here. Maybe that's the one where I did the write-up. But I was tweeting out and stuff that gee whiz, Canadian market looks pretty dangerous. So I don't think that message has changed at all. If you can, try and avoid the commodity countries. I think they got trouble written all over them. So here's some of the write-ups that I've been doing recently. In fact, actually, our level 4 instructor had even pointed out this really nice bear put spread trade a while ago. I mean, this thing looks like it's just continuing working its way lower. Actually, I've done up some really nice charts on. Actually, you know what it is? It's the Canadian financial stocks. Yeah, that's what it was. It was the Canadian ETF. I thought this was interesting. So this is a basket of Canadian financial stocks. And you can see, I mean, this actually, I think it actually has a very well-defined bearish chart pattern working. It's about halfway to its target. There is the ABCD objective. It's the ABCD. I think there's actually quite a few technical objectives all the way down here. Good old Brian's favorite fibs. There's some gaps down here. Foggenbaum's off of huge ranges. So I do find it interesting that this is the backdrop. And I've told you guys before, if you've never heard this before, it's not a bad idea to write this down. But there's an old expression in the market that says that as the Canadian banks go, so goes the broader market. And it's simply based on the fact that the Canadian banks are like basically an oligopoly. They have basically massive barriers to entry in the Canadian banking system. So they've got themselves set up absolutely perfectly. There's nobody that can touch their business. And they would definitely be too big to fail. So if they go and write a whole bunch of mortgages that really they should never be doing, the sad part about it is if all of those mortgages go belly up, the Canadian taxpayer is just basically going to bail them out, which is so, I mean, it's borderline criminal how bad these banking crooks are. And of course, they don't really care if they hyperinflate the economy by printing money, because they're the ones that basically control the money supply by issuing all of these bad mortgages that, half of them are going to go belly up. So fucking what? They don't give a shit. And that's it just destroys the fabric of nations. But anyway, ironically enough, though, one of the guys that was one of the original proponents of Bitcoin at around the site, he used to always call these guys the banksters. And when I first started working with this space and crypto space, I was like, oh, they're not so bad. But over the past 10 years, I've been enlightened as to really how crooked the whole damn banking industry is. But point I'm trying to make here is the writing's on the walls. Like if you are a technician, if you do understand this image, then it makes perfect sense. The last place in the world you want to be invested in right now is the banks. And I do find it fascinating. What's the news headlines today? Oh, it turns out that your friend and mine, although I don't think he's any of our friends, and if anything, I dislike the gentleman immensely because he went on like Oprah Winfrey or some crazy show like that when that was still on the air. And he openly came out and said that Bitcoin was a fraud. And yet his firm has actually been convicted of fraud in the marketplace repeatedly. And we've never once in the entire history of Bitcoin ever seen any reference to fraud. So a total hypocrisy. Anyway, your buddy and mine, Joey, is now actually selling a huge chunk of his stock in his bank stock. So he even knows that, oh boy, these bank stocks. And like I said, really good rule of thumb, take a screenshot of that if you can. But Canadian banks usually are a good leader. And so obviously, JP Morgan's a big money center bank down in the States. It's probably on the same footing as these Canadian banks. I mean, anybody's taken TRI education program, of course, you know what you're supposed to think when you see M's. in the marketplace. It'd be interesting to see whether this M came in on the other side of trend line. So probably what happened here was trend line break. There's an M. There's a nice FU move. Run a whole bunch of stops, and then oh boy, there's a really big failure. And I wouldn't be surprised if he's seeing this sort of bearish structure on the other side of the trend line. He's like, you know what? Maybe it'd be a good idea to take some money off the table. So, put it all together. I thought that was an interesting sort of anecdote of how dangerous the banking system is right now. Very, very dangerous. Yeah, well, I suppose only time will tell what happens with all this. So, where is the strength today? Interestingly enough, we had Google come out the other day, as I said, and they missed their number, and they talked about how I think it was like revenue from well, I can't quote it specifically. One part I think is their cloud business or something like that did very poorly. And the stock got absolutely smoked. And actually, I even had like a little trivia question for people. When you see such a large gap, what should you be thinking? And the answer here is gap and go. And interestingly enough, that actually is confirmed, where we actually did break through the low of the gapping bar. So believe it or not, Google's price target actually has to be somewhere down in this area, which actually makes sense because 50% rule WD GAN. That's what markets naturally do. And then also too, it looks like we have a trend line off of these lows that all they're going to do is back price up into it. So it is interesting how today, and actually not today, but I guess over last night, Amazon was sort of following suit with the Goog until they came out with their earnings, and they just smoked them numbers. $141 billion in revenue. Holy, actually 143. So I mean, they beat estimates by just a couple $1 billion. 1.5 billion dollars. Like goodness gracious. And of course, the earnings per share by beating revenue by $1.5 billion, the actual earnings number per share absolutely smoked estimates. So it is interesting that there are some winners and some losers in this online space. Also interesting too how even with that absolutely insanely bullish number, they're having a hard time getting this thing back above. I guess we can do there back above this this trend line, and this isn't really a trend line. This is more like a head and shoulders pattern, I think, that I was conjecturing about. Anyway, so dead cat bounce right back into resistance. I don't know whether they're going to be able to break this thing out or not. I'm not even quite sure the relevance of that study there. I suppose, this is probably a good example. If you were a botter, you would short that level. You'd move your stop to scratch, move your stop to trailing, market gaps violently higher. You better just get out of that trade at scratch. That's the way it goes. So that's really what's driving, I think, the tech play today. And it's fascinating how we're getting basically a disconnect between one tech stock and another, which theoretically are somewhat in the same space. Be interesting to see what's driving Amazon's actual numbers. Maybe I'll look into that through the weekend versus Google, because clearly, is it the actual retail business that's helping Amazon here, where Google, of course, isn't in the grocery business and stuff like that. But I guess just the simple message is big disconnect there. With it being Friday, of course, we always want to think about options expiry. I don't really see a heck of a lot else. I mean, it was interesting to see NVIDIA is right up against a really important level here. Is this thing going to carve out some head and shoulders top, double top breakdown? Notice how on this options expiry day here today, and I've talked to you guys about this, that usually what ends up happening is the market darlings, as soon as they're perceived to breaking and everybody's screaming the sky's falling, all of a sudden mysteriously this damn thing will firm up and start rallying out of nowhere. So you can see this is definition harami bar. Baby is completely inside mummy's body. If we finish the day like this and then tick up through this high, believe it or not, that's a buy signal that would register first thing Monday morning. So we'll see how that goes. And he's like right on the precipice. So if this thing still is a market darling, keep in mind his earnings are still pretty far away, a week or two away. I wouldn't be surprised if this thing firms up a little bit just on anticipation. Maybe since Amazon's doing okay, maybe these guys aren't going to be so bad. I don't know. Not really anything new trade wise to do here. I think, the sells, if you were going to, I don't really like the idea of selling market leaders or shorting market leaders, but I suppose that 3-bar fractal right there would be your sell pattern. So you're kind of coming late to the party here thinking about shorting down here. I wouldn't even be surprised if there's a counter trend rally that fills in those gaps. Something like AMD, you can see outside downside key reversals happened way over here. Another outside downside key reversal, which confirmed a double top, happened over here. Another outside downside key reversal happened over here. So coming and shorting something like AMD now is actually, I think, it's pretty late. This thing topped out like almost 4 or 5 months ago. So sort of the same thing with Nvidia. And sort of the sentiment in the market is pretty negative right now, I think. So does it really make sense to get too uber bearish right now? I don't know. Then also, buy when it snows, sell when it goes. Looking at the breadth indicator, the way it's looking. And of course, this eclipse season, this is when things are supposed to look the worst. And I think they look pretty nasty right now, which, and ironically enough, usually is a sign we're pretty close to some sort of bottom. Anyway, we'll see what happens here going forward. Trade your setups, opinions, they're not really worth that much. Your setups, they're priceless. And actually, speaking of setups, it is interesting to see Mr. Zuckerberg, of course, has gotten himself in hot water with, I think, 42 different states. But this is an interesting commentary on the bot, where you're supposed to have 3 higher lows to risk against. So you want to let these guys, and these guys all defend your trade. And interesting, through that whole news event, the market dumped violently, took out these lows, but has not taken out this original double bottom. And now you can see the darn market's trying to gap higher. So kind of like Nvidia, if this thing actually finishes here today and then ticks up through these highs Monday morning, well, that's a 3-bar fractal, and you might find that actually that is the bottom. And we were kind of conjecturing with the lounge and the group and stuff that what's the worst case that can come out of all of this? Maybe these 42 states sue and Facebook has to pay some big ass fine or something. And then they have to put some sort of, disclaimer when you're logging in, attesting the fact that you are of age and you're not a minor and all that. Then that basically relieves Facebook or Google or Meta or whatever the hell you want to call them of any sort of legal liability. And then it's just business as usual. I was actually sharing in the where do we want to have this? Sharing this in the lounge recently. A video that I watched the other day. These TED Talks. I don't know if you guys ever listen to them. There's some pretty good speeches that these guys give. Anyway, I even tweeted it out. I think it's in everybody's best interest to listen to this guy. I think he had a pretty good take. What is the new world order going to look like? And I think a lot of people are looking for countries to actually be sort of the global leaders here for the next century. And I actually think, the whole idea of nation states, that might be like a concept of the past. I mean, I can very easily understand like Eurozone kind of idea, huge bureaucratic bodies that, regional sort of regulators kind of idea. But this guy kind of makes the argument that the next global superpowers are not going to be like individual countries. They're probably actually going to be these big tech corporations. And I hate to say it, but I mean, just like what we saw out of Amazon today. I think I was even talking to somebody else this morning that was like, $140 billion in revenue for a quarter. I mean, these numbers are absolutely insane. And actually, this guy finishes off his speech with, we better get in front of these companies and, maybe encourage them to change their business practices because the path that they're heading us down, we're all going to be like zombies on our cell phones, just mindlessly scrolling, and of course, gobbling up the advertising, which of course lines all these big mega corporations' pockets. So, I might even argue that something like, I mean, I don't know whether I like it at 200, $300 a share. I hate to say it, I actually think there was a hell of a gift there on this Facebook Meta stock back there when it was like $100 or so. Anyway, did find it interesting. If you are a trader, that they came and took out these lows, and if you actually get a nice little bottom in here, since this high has actually already been taken out, I think I might take a very serious look at buying some calls on Meta here, which of course. I don't know whether that's a popular sentiment or not, but anyway, just what I'm thinking here on the market. All right, I don't, I gotta say, Julian's getting very, very good at these broadcasts. I love the work that Julian has done on testing and running the data on the breadth indicators. I mean, as I sort of said yesterday, that while I was sort of commenting from the cheap seats, that this breadth indicator is sort of my life's work. So it's great to see that the whole team is bringing this into fruition. It's totally kicking ass. And I got to say, I think Julian's actually a better public speaking representative for TRI than I am. I'm way too opinionated. But anyway, I guess where I'm going with all that is I don't really talk on Thursdays. And so what ends up happening on Fridays is I'm way too long-winded. There's 20 different things I want to talk to you guys about and never have enough time to do them all. I suppose the big thing I'm supposed to be talking to you guys about here today, and what sort of my normal routine is what's our day trading routine? I did take the opening range trade today, got stopped out, so it was a loser today. But I'm still profitable on this combine, which is perfectly fine by me. Just slow and steady wins the race, but I was off 66 ticks here today. Boo, hiss, hiss, boo. But I am seeing more positives than negatives, so that's always a good sign. Like I said, combine's up, so I haven't hit the point where Nebraska goes, "Hey man, here's a whole bunch of money, go and manage it." I think you have to hit like I think $3,000 threshold there, but we'll cross that bridge when we come to it. All I really want to do is be a demonstrator of best practices. In fact, that's my morning affirmation is that I don't want to do stupid trades that are outside of plans and that you guys look at me and go, well, what the fuck is this guy doing? He says one thing but he does another. So anyway, blah blah blah. Here was our opening range trade, and if anything, feeling better that just sort of getting into the groove, taking the trades and living with the results. Got stopped on this. So as a result, I wanted to put the combine away for today. I don't really like having multiple losing trades on the combine. And if anything, I kind of like this because this sort of sets the tone for the day. If you're up a bunch of money from the opening range trade, then you can go hunt other setups through the day. And, if you give that money back, well, then you end the day scratch. So I was down on the day. We'll just leave it at that for the day. Now, what that does mean is I pop on over to other accounts and I trade them. So I had a really fun setup, and this is a great if you are considering day trading. If you can concentrate on settlement tags They actually work really, really great levels to consider a trade. So I did second trade I took today was actually in my sim account. Did buy a 78.6 tag and got quickly told that that was wrong. Then came in and on settlement, hunted another trade, and that one worked quite well. And I ended up actually getting stopped on this. Market came back down, but yeah, took a good 70, 80 ticks from the market on this one. So, I ended the week relatively positively. It's a relatively okay day. Nothing to get too excited about. Friday's kind of a fun day, or funky day for day trading anyway. A lot of FU moves, and I think we saw that a lot in the market today. I was talking with one guy in the day trader room, and he was just like, I can't believe the chop that's going on here today. So we started off the day with some econs, the Fed's sort of preferred inflation gauge. It's more a function of how the US consumer is getting hit by inflation, this personal consumption expenditure index. Oh boy, there's a mouthful. But you can see came in slightly higher than expectations. I think probably the one index that they're watching closely is this price index. Remember, the Fed would ideally like to see 2% annualized inflation rate. This at 0.4, if you annualize that, times 12, that's like four and change. So still a little bit too high. And so as a result, I think that we really shouldn't expect to see the Fed lowering interest rates anytime soon. They need something to break around the world. So I think that basic message remains. And you can see that most of my notes of what I saw in the market getting started today was just all about, like, NML stands for no man's land. So I really didn't like a trade location in gold. 4-hour chart, I can sell against these highs, I can buy against these lows. Can't really do a hell of a lot where we were here. So I could maybe think about shorting, but as we get beyond European close on a Friday afternoon, I don't really want to do a hell of a lot. So just left it alone. Stock, I already talked to you about crude oil. Just had some fun in there on the sim, but same sort of thing in the stock market. I mean, there is the ES daily chart just absolutely puking out here. And if anything, perfect analogy of the algo, the eclipse window we're coming into. I think tomorrow is the actual eclipse event. So do we hit some sort of fear crescendo here through tomorrow? And then, of course, next week we have the Fed. And I wouldn't be surprised, if anything, what this looks like to me is this is a sell the rumor type of market. And I wouldn't be surprised if in this upcoming meeting, the Fed kind of says, well, we're probably going to cool it on interest rate increases. We had the ECB earlier this week come out and say, we're going to take a pause. We had the Bank of Canada come out recently, say they're going to take a pause. I think the Australians are pausing. So I think all the central banks are kind of like, and of course the message is going to be we're data dependent and keep an eye on that and all that kind of fun stuff. But I think the general message is that they're probably going to go on pause. And, I mean, if we get more kind of Amazon numbers and less kind of Google numbers, you might find that the stock market actually ticks up here. There's no buy signal here for the ES right now, that's for sure. We're still just sort of in that, okay, well, are we actually going to carve out a bottom here? And of course, we want to see a big fat W come in off these daily charts. Interesting to see if we go over and look at the options open interest. Not quite sure. That's the news and stuff I need to talk about in the after party. But if we look at the, I'll sort of finish off this free broadcast with a boo at the options open interest information. Let's see, which page is that? Is that, nope, that's our school spreadsheet. I always get that mixed up. Over here. Oh, come on, Brian. It's one of these. One of these is not like the other. Okay, I just had that one up, so I know it's not that one. Oh, gee whiz. I hate when I do this. Okay, not that one. And I have it over here. Oh yeah, I guess I do. All right, so options open interest. Um, where's our charts? All right, so that's these guys. Remember the options, boys, they'd like to try and make as much money as possible. So as you saw on the futures charts, I mean, we're just making V bottoms, but it does look like we're coming into some interesting technical objectives. On the SPY, interesting how we're right up against a 4669. Still think the QQQs we could hit this 4669. We'll see how it goes. We got that Fed coming up here, right? This is our sort of eclipse, and then the Fed. So do we get some sort of pivot here? I think that's what's probably going to happen. But just to give you an idea why the market is where it is right now, 347 50 on the QQQs, 340 actually, well, it's jumping all around. 347, I guess we'll say. So we go look at the NASDAQ puts. And you notice that 340 here, there's the heaviest open interest on the puts. So definitely would expect that they keep the market above that 340. 345, probably a level they would like to try and get it to go out. So these options expire worthless. And if they can somehow get the market above 350, then they hit a nice big fat home run. Woohoo! Yeah, on the S&Ps, same sort of idea. The the SPY, the ETF sitting right now, 412, we'll call it maybe. I don't know, somewhere in that area, 412, 413. If we look at the S&P options, 410 seems to be the heaviest open interest there. So not a big surprise. They'll probably try like the Dickens to keep the market above there. Looks like these 420s are actually going to expire in the money. So these guys are going to hit a nice big fat home run here today. People who bought that, they're going to have to pay out those guys. But on balance, the rule is wherever the heaviest open interest is, and this is slightly higher, that's usually the anchor. I wouldn't be surprised if they try and, maybe late in the day you see some mysterious big fat rally. I don't know whether they can get it up through 420. That might be asking quite a bit because that would be all the way. Well, that would be up into here. Can they rally it up into there? If they can, then you know that the stock market boys hit a massive home run. So if not, then it means that the stock market boys are actually going to be forced to buy a bunch of ES stock, which means, we're probably going to see some selling right out of the gate first thing Monday morning. That's usually what happens. It's what happened last week as well. Not and just finishing off the video because somebody over there is like, no Bitcoin. I think we can talk lots about Bitcoin in the after party. Today we have on Ben from Benkoff Checkland. Hey, there he is. Hey Ben, how you doing, buddy? See, does he have his microphone on? I think he does. I don't know whether he knows he has his microphone on. Anyway, he probably stepped away. But anyway, I think he's planning on coming doing an after party with us. So we're going to talk basically all crypto and Bitcoin and Litecoin and what happened through all that. What I would just simply say, of course, here is I got no business to be a buyer. If any of you are TRI students, you know that this is an inside bar. And if we trade down through this low, that low is 33,738. That's actually a sell signal in candlestick land. And we're at 33,796 is our low here. So we're about 60 bucks or so off of flashing a sell signal here. So, I mean, don't be shocked if you see the corn price come back down to earth. I think I told you recently, this image here bothered me immensely. That we had this big momentum coil, and usually the way these darn things resolve is you get some big horrendous push up and then some big horrendous push down on the other side. And that's almost exactly what happened here. As I had said there a moment ago, probably best case scenario is we just do something like 38.2, call in pump chaser zone. So there he is. Notice that's a 2.618 off of this original top, although we did take this high out, so we have to draw that now off of there. That has not confirmed yet. So actually, believe it or not, the one that has confirmed is just this little itty bitty one here. 4669s, that would make sense. I think we also said there's some gaps down in here that you could use filling. So I would say just naturally healthy move would be maybe AB equals CD down into our 31.8s. And maybe even do things like just revisit basic trend lines. This is a 4-hour chart. So something along those lines. Yeah, right down in here. That would be healthy. It would be natural. It would be normal. And I don't know whether we really have too much in the way of divergence, but you can see RSI is not really happy. You know, if you follow my RSI rules, the second M that you see here is a sell signal. So that's actually your sell signal. It's not through the 50 line, right? It's way up top here through 70 or so. We're actually getting a third and a fourth M here. So these are all the noobs and stuff coming in shorting. But I would just say that whatever that vertical line was, that breakdown there, that was your trade signal. So where is that? That happens to be right off of this little inside bar failure. I like that trade. That makes sense. And fog and bombs. First stop of the trade objective is going to be a test of this horizontal support level, 2.618. And if this thing really gets going in earnest, 4.669s and down into 38.2s. That would make perfect sense to me. But as I said, we'll do lots of this kind of review shortly with Mr. Benkoff in the after party. He's our special guest. Every Friday we have special guests. I would strongly suggest that you consider joining TRI. Those after party guest shows just on Friday alone, I think, are worth the price of the subscription, just even for the basic silver membership. And then, of course, FYI to everybody, and I think Julian did an excellent job highlighting how absolutely awesome this breadth indicator and the dashboard and the trading results. Did I mention that we have one market that's actually spitting out a weekly commodity trend survey buy signal here? And I think that market looks absolutely incredible right now. So, you know, put it all together. The point here is that we are going to be raising the price for this. And frankly speaking, might even just consider taking this entirely private and funding sort of, I've told the boys, if we can get 3-year track records of auditable results of this algo showing positive returns, we can take this to Wall Street and go get like a hedge fund or something to fund us to the tune of $100 million. We just can go completely private. There are a lot of people. I actually got messages yesterday from people saying, please don't do that. So that's kind of cool. But if you are a site member, just FYI that we are planning on raising the prices. And even the Black Friday deal, we are giving a special deal to current site members. You can have it at the 2023 special price, which is ridiculous, like $70 a month or something for this service that could make you thousands and thousands of dollars. So if you're one of those cheap asses like me, you better take advantage of that and go ahead and pull the trigger. And we are seeing a lot of people. Julian did a very good job articulating that message yesterday. So just anyway, FYI on that. Okay, I think we'll leave the free broadcast at that. We'll do another broadcast, of course, on Sunday. Good old broiler chickens. So we've got that to look forward to. But what I'm excited about is here, we've got one of my favorite people out of the state of Florida joining us here to talk a little crypto in the after party, Mr. Benkoff. Check. So I'm totally stoked to get to talk to him again. All right, everybody, have yourselves a great day. PMA for the win. Take advantage of that deal. All existing site members, you should have gotten an email from the team with regard to that. I see Matador. He said he just went and locked it in just to make sure that he gets to take advantage of the cheap price. So slow and steady wins the race. Don't take no wooden nickels. Remember what your number one job is. All the best and bye for now.